The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another action-packed adventure in the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we'd like to come to you at this time. Oh, but it didn't do that. Didn't like it again. It's mad at me. What do we have here? Do I have anything else? Yes.
The following takes place between 2 p.m. and 3 p.m.
I'm unsure why this thing hated me.
The following takes place between 2 p.m. and 3 p.m.
It works. And you'll find out. Anyway, the S&P is off 25, which is just under 1%. Dow's 238. Nasdaq's off 84. What's the Russell off? Can somebody in the den tell me? I don't believe this. This actually says 0.4%. Is that right? I've been looking at this all day long thinking maybe it was busted. I never really checked on it, but I guess I probably should have. Is that right? Yeah, down 4.6 points. Okay. This one's wrong, and I don't know why it's wrong, but I'll have to figure that out later today. Saw a lot of bad ticks over the last few days. Tend to see that right before a market changes course, both up and down. So it's always a sign to kind of keep an eye out when things aren't there. That things may be changing fairly quickly. I always wondered whether or not they pay somebody to just pull the cables, the power cord out right at the time that you need all the data the most. That used to happen a great deal more. It still happens, but it tends to happen on free sites. I noticed that started to see a lot of the data that I get for just doing the show, because I've got all my other trading stuff on another machine, that is basically impervious. It's like it was put in a mason jar and sealed away from the world. It only opened up in the world when I make a trade. But this machine, I kind of just use all the standard stuff that's available for free. I don't spend a lot of money on this stuff. But I notice when it doesn't work, generally we're pretty close to having a market moving. Now maybe you could make an article, a claim that maybe that's because everybody else is trying to use it at the same time and it's a capacity issue, but it does seem to happen a great deal. Anyway, off 25, we're playing around this 2,700 level. As I've said the last few days, we could get back down to 2650, 2670. I don't think that would be way out of the scope of what we should see for Friday for expiration. Everything looked lower, and the action yesterday in many of the ETFs was kind of nasty. Why don't we get in through a few things, and then I'm going to take a look at a few other things. But yeah, I think that's it. Let's just do a little history, and then we'll get into the rest of the stuff.
And it's all just a little bit of history repeating.
It is history repeating, and on this day in 1988, more than 8 years after they intervened in Afghanistan to support the pro-communist government, Soviet troops began their withdrawal. The event marked the beginning of the end for a long, bloody, and fruitless Soviet occupation of Afghanistan. That basically they spent whatever money they had left that they hadn't squandered already on communism there. Of course, they probably would have been able to make it, but we did kind of help the Afghanis along by giving a bunch of Stinger missiles so the Soviets couldn't fly helicopters over them anymore. And I think it was Charlie Wilson think Charlie Wilson was the lone representative from Texas who actually kind of spearheaded the whole thing. Movie made about him, which was kind of slightly interesting. I thought the documentary about him and his life was far more interesting. A horrible womanizer and a raging drunk, but at the same time, he was able to actually do something with his life, and that is run the Ruskies out of Afghanistan. I think we did learn something from Russia. We never had any kind of unbelievable ideas about what would happen. But hey, fight them there or fight them here. I'd rather fight them there. At least, we've kind of done that in the U.S. history. It's always been fighting over there. And you know what? At the end of the war, all our stuff is still here. So, seems to be a good, seems to be working so far. But we shall see. Of course, Wednesday morning, we see Macy's, Canadian Solar before the bell. After the bell, we got Cisco, Take-Two, NetEase, Jack in the Box. We get into Thursday morning, and it's Walmart. After the bell, we've got AMAT and Nordstrom. So we've got a little bit of earnings out here, but short of Walmart and Cisco, I think those are the only two. Walmart looked to me like it could gap down. Cisco also looked maybe a little lofty. We'll see how those two come out, but I don't think they're enough to change the tide. Looking at about everything that I can find, it certainly looks like we're going to see lower prices by Friday. And my guess is that we get that kind of movement down, then we go into a very light volume week, traditionally, historically, into that 3-day weekend. And if you're bullish, the best thing that you could see is that you get better prices going into that 3-day weekend. And when we come back, that light volume is squeezed out all the weak hands. Oh, wouldn't that be nice to be able to just walk right in after all the weak hands have given up? You get into a stock at a good price and watch it go higher. What positive waves could you be sending out? Anyway, 2705 on the S&P cash. The first stock I wanted to look at is Apple. I didn't have a real clear idea. I knew it was going lower, and it could be anywhere from 180 to 185 by Friday. So we might just be there right now. What I was pretty sure is that anything below 187.50 would open up the floodgates on Apple. Now, you had a stock that wasn't really that short. You had a lot of people start shorting it, though, off the bottom, and as it went into earnings. The earnings, of course, weren't that good. The only thing that really kind of made Apple go higher was the huge buyback money and the threat of Buffett to buy even more. Eventually, you get up to the point where no one can short it anymore, and it just kind of comes back by natural gravity. That's kind of what we've got now. But that's why you get these gaps down, and that is that as long as you got everybody on the same side of the rope, maybe that rope in the tug-of-war moves a little. When everybody goes on one side, man, does everybody on the other side kind of have to fall over fairly quickly. We'll be back with tortured analogies after this message.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
NASDAQ off 78, the S&P off 24, and we're just, 4 points above the low of the day, so there's not a lot going on. Looking at it, and let's take a quick look at market volumes here today. If that's right, we've got a fairly accelerated volume profile here at 17 after. That's we got about 4 billion shares, so we got under 6 billion yesterday. And so we're probably going to do 7.5 billion total shares on the entire market, which is going to be a fairly decent acceleration from Friday and Monday. So I think we got, at least a little bit of a push going in to this 3-day weekend, and certainly on Friday. See if there's anything else out here. Of course, a lot of that push is coming from the dollar index. And what do we have here? 93.16, I see, is the last tick on the DXM8 contract, which is the dollar index. That's up 61 cents or 66, 2/3% for those people in Lutz. So what else do we have going on? That's about it. Everybody probably freaking out a little bit about the strength in the dollar. Probably freaking out a little bit in gold. Gold's off 29 bucks. Silver's off 38 cents. Platinum's down 18. Do I still have that PL? Man, I've got to do a better job of remembering that symbol. For some reason, it escapes me. PPLT. See what that looks like. It's been the strongest looking one of the bunch. And of course it gapped down today, but not a lot of juice. Still looks to me like the better one. The May 1st low came in at $85. $84.97, 66,000 shares. So it's not a big one. You got 42,000 shares so far today. So it's not going to be a blowout of this 84.97. I continue to think that that one is the best looking one of the bunch. Probably going to turn before the rest. Certainly looks like it could break out this low, but the volume hasn't increased, at least so far through the day. We'll see how this ends up in PPLT. I haven't been long any of the, I got a question in here, have I been long any of this stuff? And the answer is no. Gold had one really good signal, and that was back in December 10th or 12th or whatever. I went long it. We went into January. It looked good, and for whatever reason, it didn't act right. And I think whether it's AKS Steel, which did the same thing, it had a beautiful pattern, and it just didn't work. And I gave it like 3 or 4 days, and, you know, it just never did anything. It didn't act like the way the chart looked. AK Steel still looks beautiful out here to buy. But guess what? It's not acting correctly. So I don't know if this thing, when something really doesn't act correctly, or at least doesn't act the way you think it should, Jesse Livermore said, no prognosis, no profit. And I think that's the way you got to think about it. If it's not acting right, then you got to go back in your assumptions. And if you can't make a new assumption or a scenario or a plan, then you really don't know where the stock's going. It's just kind of more of a gamble. I like to know that I have an abiding belief that I have some kind of edge in the market. And after about 3 or 4 days, if a stock doesn't act right, I'm pretty much ready to get out of it. I think there was another stock that looked beautifully but reacted horribly. This was Cody. This thing had about 1650, I think. Looked beautiful. Came out with earnings, blew up, of course, but back down to the previous lows below November 3rd, $14.24. That was 9 million shares. Yesterday you had 6.2 million shares. Today you've got 3.4 million shares. So you want to watch these. Any close back above 14.24 would say a floor is back in. I dislike the energy coming off the top out here now because of this huge down day on the 9th of May. But you know what? If this thing went sideways for a week or two, come back in the first week of June and this thing's made it out, not a bad looking chart. You've got basically 2 highs at 21 bucks that are about the same volume. So it wasn't a big deal. The only thing you have is the volume kind of increased slightly on the way back down. So if this thing would base out, this may be in one of these nice trading ranges from 14 bucks to 21 bucks. Well, that looks like a 50% trading range to me. So this thing's going to have, or probably go through, at least in my call, is got to spend maybe the next 2 weeks in a market that's kind of soft. So that's going to tell you a great deal more. Also, whether or not maybe somebody's under there buying it every time it goes down a nickel or two. No soup for you. Oh, Mr. John from Philadelphia is channeling the soup Nazi. What else do we have? Okay, let's go ahead and look at some other charts. Went through a few of these this morning, didn't get a chance to do the rest. You can give me a call at 877-927-6648. You can email me at path@tfnn.com or put a question in the den. Palladium. There's not a palladium ETF, though, is there? Is there one now? I'm asking people in the den. Because I'll be glad to look at that chart, too. Don't know. I don't think that there is a palladium ETF. I think the only palladium I ever touched went into a nuclear weapon. I think it was like a surplus or something. Can't remember. It was like a disc that went into it. Been a long time ago. Anyway, see what else. Let's go back here and check. 2702, so we're just touching the lows of the S&P once again. Let's go back here and look at some other stocks. I was looking at these earlier in the morning. Not a lot of move so much in Verisk Analytics, VRSK. This one came down on monstrous volume, got up back up to that high on the 2nd of May. It's rolled over a little bit here, but not a lot of juice in it. T. Rowe Price, I think we talked about this one earlier in the day. This one was hanging out at highs with fairly light volume. Down on a light volume doji so far in it. ERUS. This one I thought had the most chance as an ABC down. This is the Russia ETF, ERUS. Did everything I like in an ABC down. That is a gap down with heavy volume, came back up with no volume, got into and split what was left of two gaps, just about in half. You could have gone up maybe another 75 cents. Gap down today, not a whole lot of juice just yet. But again, I think maybe this whole move for the next 2 weeks is lighter volume.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And hopefully we're all back. Got everything taken care of. Rudely cut off by Skype. Anyway, we're talking about the Russian funds. I wouldn't be surprised. This one, I've heard a lot about financial issues in Russia lately. They cut out a aircraft carrier. I think an aircraft carrier and some jets and some other stuff that they were supposed to build this year. So it looks like maybe they got some financial issues. This one was kind of interesting, though. If you're looking at a ABC, about as good as you can get. I would have liked to seen a little less energy back up off this low, but it did about exactly what it was supposed to do. Retraced almost 50% up to 35.01 yesterday. Gapped down today. And that's like $5 on what, $30, so not too bad. But if it's a 1-to-1, takes you to 2670 on this Russia capped index fund, ERUS. So yeah, it could be interesting. Give me a call, 877-927-6648. Any thoughts on the sports book industry and maybe a tech company that can benefit? Everything I've heard so far says that with the ruling that the sports teams themselves are probably going to be in the driver's seat. If anybody's ever had to pay for stock market data, I think that is the key here. And that is that probably you're not going to find casinos or that kind of stuff making that much more money. Who's going to make the money? It's the teams themselves. They're going to be able to ask for and get a whole lot more money. But at least for the few people that I know in the industry and I've seen talking about this the last few days, it certainly, they thought that as far as negotiations, the teams would be able to basically name their price. And that meant that they're going to get the lion's share of this money from gambling. The other folks are going to probably make some more money, but not near what everybody thought. I don't know that part of it. I'm not a gambler per se. Never played the ponies. I think I played them once at Exarban, which is Nebraska spelled backwards. Never bet on a football team. Never bet on a baseball team. Never bet on anything. I wanted to know I had some kind of edge. Never thought I had one. So not a real gambler at heart. Played poker a lot. But to me, at least, that had a little bit of skill that I could control. I think the other ones that are totally out of my control that I can't participate in, maybe it's I just don't like it. It's kind of like watching volleyball. Not very fun after the first 5 minutes. Maybe women's sand volleyball. That was kind of interesting. But maybe 10 minutes. That's about it. Anyway, Russia looks kind of interesting out here. Now, the IWM, we were talking about that. You got a triple top in this. You got lighter volume off the bottom. But I think the perception is that these stocks are just going to hold up much better than the rest. And last time I looked, they were significantly doing better than the rest. We've had a little bounce up to 2711 on the S&P cash. Dow's just down 187, NASDAQ's up down 63. But I think we've gotten a little bit of wound in there. Apple's back into about 186. I think the easy part of this downdraft is probably in. We'll probably see gaps lower with earnings. My guess, if we do close lower, as I suspect we will this week. And I just expect that these rallies to be sold. So we will continue to see. Now, we've been down here for a while, so not unbelievable that we're going to see at least some rally attempts through the next day or so. But we'll have to see. See if you got any more emails. That's it. Okay. AWS got a lot of stuff going on out here. Let's take a look at a few more. Looked at T. Rowe Price. Got a question to look at Facebook. As we said the other day, this one looked rather set up as a high. My problem with it is it's probably just a little too short. got back up to the big gap down, which was on February the 5th. Got into it with 18 million shares on March 12th. Got into it with 21 million shares 2 days ago. He went into it yesterday on 15 million shares. So you still never got that 33 million shares. That's going to be the resistance level. This leg from April 25th looks like you could get it, which would take you back down to about 167.50, something like that. But my guess is that that may take a week or two to see these ones sell off. But you certainly had the huge volume down leg that ended on March 26th. The volume up leg that started on April 25th and gapped up the next day. Just never, I mean, the volume's been kind of dying out here. Again, this one was heavily shorted because everybody believed it was going to zero with the hearings. And generally, when everybody knows about everything, probably the time to pause and reflect when everybody knows something. Now it's back up. My guess is that there'll still be some short people on this for a while. It's going to have to kind of base out. It's kind of like Tesla. In fact, we haven't looked at Tesla today. Tesla was actually hanging up fairly good until a few people died in their cars. Not uncommon to see accidents, but I think everybody just that Hindenburg effect of watching it. It's gapped down. It's got a little doji. This could be the halfway move down, which would take you back down to the 244.59 low in April 2nd. Still, I can't touch it because this thing is massively overshorted. So they could come out with completely phony news and drive this back up to 300, which is actually where options have been kind of showing where this was going to be at. You never can tell about a headline like we've seen in the last couple of days for Tesla that kind of puts a little bit more of the downside stink on a stock. Okay, got anything else? Somebody in the den. I think we're real close to oil finding a top out here. I think that's the other leg that gets the rest of the market moving down tomorrow. But my guess would be after those EIO had a farm numbers at 10:30 tomorrow. The rig counts just keep going up and up and up. There had been a little bit of problem getting oil out of the northwest with a lot of the rivers either overflown or overflooding or frozen. Those in the last couple of weeks have really loosened up, along with those new, well, we've had about 10 new oil wells each week. Haven't made an effect yet. I think we've got a high in tomorrow right after or at the EIA numbers. And that'll bring the rest of the market down into Friday. At least that's my working supposition right now. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we've got the S&P 500 had a nice little bounce. I think it's over. Along with Apple. Market was going to get noticeably weak with Apple under 187.50. Same thing at about 185. We should see the ability for the market to take yet another leg down. Stopped at 185.10, but it's what, 16% of the NASDAQ by itself. So another buck down on it would probably be, you know, another, what, 10 points down on the NASDAQ, plus the associated stocks that have to be sold against it, too. So we'll keep an eye on it, but low of the day is 185.10 on Apple. You know, that single stock can take it out. We were talking about Tesla when we left. Got a doji out here. This is either the low or halfway down. This one has continually showed about 300. Wouldn't be surprised to see this one. It's heavily manipulated to see this back up at 300 for Friday. And again, you know, if you really want to see these stocks take a header, the entire market has to go to hell in a handbasket, or the shorts have to kind of get off of it, because as long as it's there, they'll have another news story and try to drive the stock back up. They can do that for months and years at a time. As Buffett once said, you can only tell who's been swimming without a bathing suit when the tide goes out. And that's kind of what you need for these things. I still think it's a $40 stock. I don't know if I'll be able to participate in the giant downside the stock has, just because I don't want to sit through 6 months of being on the wrong side of a stock just to be right. You can make more money other ways. Seems to be a lot tougher. Anyway, we looked at Facebook, NFLX, request to look at some of the other FANG stocks out here today. You got kind of a loose W pattern in Netflix. Really never got back into the 11 or 20 million share high around the 333. You spiked it in April 18th with lighter volume, closed back in the trading range, got to 332, which was just $2 under this March 12th high that had 20 million shares, and you got into it with about 5 million shares. So no big whoop out here. this is kind of in a big trading range back down to the spike at 292.62, which is April 25th. I don't know if it can get back down there. I think it certainly could get back down to 310, maybe hold $300 for the Memorial Day weekend. So we'll see about that. Okay. Amazon, always making news. This one's got kind of a similar pattern to the rest, i.e. went to a higher high. Some of these, this one spiked it, but with more volume, but gave it up. Tried to come back up with light volume down today. The most interesting thing I saw was a note out, I think it was last night or this morning, can't remember when I saw it, but it compared the profits of Amazon in its 23 years of being public to the profits of Apple in the last quarter. Apple in the last quarter has made approximately twice as much as Amazon has in its 23 years of existence. But man, what a cap value on Amazon. Is it too expensive? I've thought so for a long time. I don't think it matters, though, as long as everybody uses it. Maybe one day they'll be able to raise prices and make it worth that. You got customers, you got the ability to monetize it, and that's what most people think. Do I think that there's an awful lot left on the high side of this? Probably not, especially with a pullback. And could I see this thing close at $1,500 on Friday? I wouldn't be surprised with a fairly decent pullback in this market to see it at $1,500 or so. So don't see, you know, to me, $75 move in Amazon, probably not a big deal, other than the fact it's just like Apple. How many other stocks are going to have to be sold if that stock comes back, because they're such huge parts of various indexes? And I think maybe just a handful of those are going to be the reasons that we see this market pull back. Any kind of one more gap down tomorrow from Amazon could be worth 30 points in the S&P cash. And, you know, that gap down could be to 1540. And it still wouldn't destroy any kind of long-term uptrend in Amazon. Same thing in that. Now, had a lot of people looking at Microsoft. This one has held as good as any of them. Still doesn't show any kind of weakness. Microsoft still continues to be probably the best executed company that there is in the market right now. So you're down a little bit of volume out here. See if I've got, no, I don't have that up. If there was probably one that I wouldn't short, it'd probably be Microsoft. They just seem to be the best. Are they up here on a little lighter energy they were on the last leg? Yes, but I mean infinitesimal. You also have fairly decent volume in 48 million shares. That's gone through and back to the February 1st high, which had about the same volume. I'm going to say that maybe this pulls back this week, and maybe it pulls back in the next couple of weeks, but still, if there's one out here that looks as bulletproof as any of them can get, or the one that you would make the least on being short, I think Microsoft still continues to look very good. Let's take a look at Intel. Everybody's very quiet in the Tiger's Den today. Not exactly sure why, but I can smell the quiet. Intel, you finally got a fairly decent test of a top. You came about 26 cents light on it, but you're basically looking at 70 million shares compared to today with 22 million shares. Even yesterday, 15 million shares. So you could see that there's probably some kind of top coming in. You had some decent energy back on the way back up, but the energy on the way down from that April 27th high at 55.49 was more than the energy back up to this high on May 14th. Kind of just in a bigger trading range. I'd like this thing to come back down to light volume at $50.91. That's the May 3rd low. You may even get down to $50. But that would just set this up in a trading range if it does come back on light volume, which if it does come back down going into Memorial Day weekend and everything else, you're going to probably get light volume. So unless something drastically changes, it just looks to me like you got an opportunity on some of these. Certainly wouldn't be in short until probably a lot better lower hanging fruit out here. 2,706 on the S&P cash, which is off 23. So that bounce is kind of dissolved a little bit, which always makes it worse when they bounce the market a little bit too soon to the end of the day and it doesn't develop. Yeah, get a lot of calls that way. Anyway, you got plenty of time. Give me a call. East of the Rockies, 877-927-6648. West of the Rockies, 877-927-6648.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
One of the new things I started last fall was working on my sector oscillators, trying to make an indicator that gave a small edge into a big edge, and that's basically what this is. And well, you go in here and you buy when the thing's at the floor, and you sell when it's at the high. And basically in the SMHs, what I'm showing yesterday is you had a doji out there yesterday with a kind of a gap up. This is from yesterday. I don't have the numbers and generally don't have the numbers till about 8 or 9 at night after I go through them and process them all. But pretty good indication that you're within a day or so of having a fairly major high when everybody is on one side of the boat, which is basically what these are. At the bottom, you're maybe a couple of days early. Yesterday, I thought it was kind of a gift for anybody that wanted to get out or go short to see that spike in the SMHs in the morning. Volume never was there through even the first 30 minutes. You could see this thing was going to roll. Anyway, just one idea. I think I've got, what, 22 different sectors that I put in each day's newsletter, in the daily newsletter. But, you know, when you into a handful of these things, you're probably, if you're long, you probably got 90% of your trade. The question is, do you want to take and risk the last 10% on maybe getting 1 more 2 days out of something like the SMHs on the way back up? And that's kind of where we're looking at out here. But this will probably explain a few more things as we talk about options expiration this week. Again, check out my newsletter, either newsletter, to get into my webinar tomorrow night. We'll talk about how we made some of these ungodly profits over the last few weeks. Won't always happen, but when the market's ready to give you some cash, I'm standing there with a hat. See you tomorrow, same bat channel, same bat time. Sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.